And we're back here at Candlestick College, Investments Made Simple and Fun, and we are in week 2. So hopefully you took week 1 quiz, and congratulations for finishing week 1. That's a big accomplishment, okay? You're 20% through the course, and we're gonna get right into it today, and we're gonna start talking about the candle basics. So hopefully you're as excited as I am to talk about these candle basics. And honestly, when I first started trading, I didn't really even understand what candlesticks were. So if that's you, don't worry, we're going to talk all about it today. And we're just going to zoom right into the candle basics to see the definable features in candlestick basics, okay? So day 6, we're going to talk all about the period, okay? This is a really important concept today, and it's not that complicated. It's pretty simple, but we need to talk about it just so we're all on the same page, okay? So each candlestick is representative of a period in time, okay? There's a beginning of the period and an end of the period. It can be 1 minute, it can be 1 day, it can be 1 month, okay? So you have to understand that candlestick is representing a period in time. And you don't know that period until you know what chart you're looking at, okay? So if you're looking at the daily chart, the period is 1 day. And if you're looking at the weekly chart, the period is 1 week. And that's a really important concept to understand. We talked about it all last week on day 5, right? That was all about the time frame and what each period represented. So I'm just going to talk about the most basic candle that you can see, and it's the flat line, okay? So that means if you see one of these on the chart, that means there was no price movement at all. The high was the same as the low, and it opened and closed at the same, and it didn't move. Stagnant, right? So that's the flat line. And the next is, I called it the hop, okay? These are my own terminologies, but really what you need to know about the hop is that it tested the high, right? It set a new high, it went up a little bit, and then it came back down. So it opened and closed at the same price, but it went up in the period. It just happened to retrace the up movement and went right back down, and it closed at that, right? And we're going to get into these movements a little bit later, but the step up would be when it opened at one value and then it closed at a higher value, and that's why I called it the step up, okay? And then the hook up is when it raises in value, but it doesn't quite stay there and it retraces a little bit, and then it closes below the high but above the open. And that's the hook up is what I called it. And then the leap up would be if it opens and then it runs a lot higher and it closes at the high. And then you have the dip, which is the opposite of the hop, right? So the dip is when it falls, but it's bought up, or the market doesn't think it's worth that, and it retraces back to the open. And it opens and closes at the same price, but during the period, it fell and it was lower. It just happened to close at the same price, okay? So the step down is the opposite of the step up. So it falls and then it stays there. And the hook down is if it falls, but it retraces a little bit and it closes above the low, but below the high, okay? So hopefully this is starting to make a little sense. And then the drop off, okay? So you're always gonna have an opposite move of what it could be, right? And this is the opposite of the leap up. So the drop off is when it falls a lot and then it stays down there, okay? And these are doji candles, okay? So this is when it tests the high, tests the low, and then it closes right where it opened, right in the middle, okay? And these dojis are a sign of indecision in the market, okay? Not always, but these are seen at points where there's a reversal coming, okay? So it's important to realize that certain candles indicate certain things on the chart. And it's just a probable thing, okay? So the hammer candle, This is when it opens, it tests the low, and then it closes above the open, okay? These hammer candles are really important to identify because after long periods of, like let's say there's a long downtrend and then you see a hammer candle, that could be a sign of a reversal, okay? And traders all realize this. They're all looking at the same charts. They're all looking at candlestick charts. I can assure you that the good traders are all looking at candlestick charts. And the next is the shooting star, and it's the opposite of the hammer candle. And this would be an indication of a reversal down. If there's a long uptrend and you see a shooting star, that could be an indication that the price is going to fall over the next few periods, okay? So first homework is to identify the 4 key points of a candlestick, okay? So you're gonna wanna identify these 4 key points right here, 1, 2, 3, 4, and I just went ahead and I identified the first one, okay? So I identified the first one here, and this is the high, right? So you just want to fill out 2, 3, and 4, and that is it for today. A nice simple introductory to candlesticks. So hopefully this was a little fun for you, and this homework is as simple as I could make it, okay? So definitely want to complete the homework, and then I will see you in day 7. So it's going to be day 7, and it's the second day in week 2. So I'll see you in day 7.